We're bringing Scott Bauer, joining us from Prosper Trading Academy. Scott, let's talk financial markets because, again, yields hanging out around this 4.4 level. Yeah, inching their way up ever so slightly, but still in this comfort zone, I feel like.
It is in the comfort zone, Ben, but when you and I spoke last Friday morning after PCE report, we saw that initial reaction in the 10-year actually go down a few bits. We saw it hit like the 426, 427 area.
Yeah, it was short-lived, though.
It was very short-lived, and then gradually grinded its way up throughout the day here, so up to 440. And it's interesting because when that number came out Friday, I would have thought for sure that we would have seen a big increase in Fed future, the probability for a September rate cut, which we didn't see. And so I think that's hand in hand with how we saw the 10-year climb back up. Yes, 440, it's not 4.25, but it still absolutely is in this comfort zone that the market is okay with.
Scott, so you don't seem too concerned by the pace, the run-up we've seen as of recent, right? You've got the dollar, which isn't really even participating, I feel like, kind of focusing on Europe a little bit more. But, again, still below 4.5%. The market, I mean, when you look at it, stocks at all-time highs, I mean, investors seem cool with it.
They really do. And, there's so much that you can read out there that, the market's due for a major pullback, this, that, and the other. But, yeah, there's a lot of complacency right now. There's a lot of comfort. We get the big jobs number again this Friday. It is really surprising to me, though, overall, that with all the uncertainty out there, that we are hanging out towards all-time highs.
Scott, am I correct to keep an eye on the U.S. dollar here and sort of focus on Europe as the tail that wags the dog, as I'd like to call it? You've probably heard me say that a few times. It doesn't seem like yields are the major driving force right now.
No, it's not at all. And as we've discussed, I believe the dollar has, strengthened and been that pillar recently, not because so much what's going on here, but because of weakness overseas, because of weakness with other currencies. So if we do start to see things pick up in Europe, in Asia, wherever it might be, I think we could be set for a pretty quick drop in the dollar if we start to see things pick up overseas.
You got the euro back below 108 here as we begin the week, right around this 107.80 level. European, French elections, the first round ultimately. And I think they go back on July 7th, but then we also have the UK, as far as I remember, on the 4th, right on Thursday.
Yeah, and talk about some uncertainty, with our elections. Then you look at what's happening in France. There's a lot of uncertainty, and maybe that's why we're seeing the euro so weak, the pound so weak right now.
How about the yen, Scott? I mean, that seems to be that trend that just continues, right? I mean, everybody keeps thinking, again, we're going to see some sort of intervention from the BOJ at some point soon.
There was a lot of talk that we'd see something over the weekend, which we haven't seen yet, but there's a lot of pressure over there, and I do think we will see something sooner rather than later.
Looking at the data, the Tankin survey, little change from last quarter. It looked like sentiment from the larger manufacturers actually ticked up ever so slightly, but really not much of improvement for non-manufacturers, the larger and the smaller businesses as well. Still kind of treading water there. Scott, talk to me about the Fed minutes this week. Any real insight to be had there? Any clues in terms of that rate cut that you were looking for on Friday?
No, unfortunately not. I think it's going to be a lot of the same. We're grinding there. We're getting there. We're not there yet. Some of the data that we've seen, recently suggests the economy slowing down. It's still going to be about the labor market. But again, Ben, my big concern is the focus that the Fed has is all on data that's happened in the past. It's not forward looking. So we may get to this point, whether it's September or sometime in the fourth quarter, that they say, oh, no. And they really are then in the hot seat of quarter 50-point basis cut, accelerating those cuts. So that's my big concern.
Scott, the traders that you're working with on a daily basis, in and out, and helping them, can you talk to us about what I kind of feel like this is not one of those hated rallies, right? I feel like with NVIDIA and some of the other big names, there's been a lot of people that have been able to participate in this. It's not driven by shorts that are closing out those positions and longs that are just holding tight.
No, it's really not. And one of the strategies we've taken is to ride the trends. You always talk about trend. Yeah. Trend is your friend. Yeah. So ride the trends, but at the same time, because volatility is so cheap, having in our back pocket a just in case. whether it's in the VIX, whether it's some downside puts in the Qs, SPY. You know, insurance is so cheap right now. I don't mind spending a little bit, even if it takes, you know, a percent or two off my other returns. But yeah, you know, there's no signs of the market really pulling back, slowing down. And it's a good trading market to participate in that trend.
Sure has been. Multiple trends that we've been watching here. Again, we were just talking about the yen being one of the more pronounced, but probably least participated in many ways, but a textbook example, as I like to call it. Scott, in our last blocks, Alex discussed this week in terms of the break on Thursday as somewhat disruptive in many ways, and the markets don't really like that. They like balance, right? So I'm kind of wondering, is this something that you keep an eye on, right? I mean, you've got this event, you've got obviously traders on edge, well, on the edge of their seats, I guess I should say, with markets at all-time highs. Maybe another good example of, as you just put, an opportunity to buy some insurance. It's cheap, and we have a little bit of a kind of a weird week ahead.
It is a really odd week with half a day in the equities on Wednesday, off on Thursday, full day Friday, but I think it's probably going to be the lowest volume day of the year, even with the jobs report print. You'll probably get, you know, some activity right on the opening of the market, and then the rest of the day might be a real, you know, ho hum sort of day. But that does really kind of portend the situation here to buy some cheap insurance ahead of that. We know what happens on days with low volume. We can see the markets move. We can see some added volatility when people are away from the markets. I'm really looking beyond that, though, quite frankly. I'm preparing my traders kind of for not just this week, but for next week. You know, keep some of that premium theta, that theta decay in check this week because of this odd schedule, and then moving on.
All right, Scott, let the good times roll. Enjoy your holiday and be safe. Look forward to seeing you back here in the very near future. Scott Bauer joining us this morning from Prosper Trading Academy.